Don't you just love headlines like this? It's great for selling newspapers, but it's terrible for getting people to get in a panic and wanting to sell. Remember, you don't lose money until you actually sell a stock. Rather than see this as a reason to panic, let's use this as an opportunity to buy good stocks at cheap prices, so that if we do come out of this market turmoil, or if we go into recession when we do come out and the economy strengthens again, you'll have more shares with greater dividend income and therefore a better opportunity to make big returns on the upside. The way to do that in this market is not to buy at the market. Do your homework first and get an idea of what you think is a really cheap price for an individual stock. And then you do that by using limit orders. Limit orders are basically just an order in the market to buy a stock at a certain price. And what you want to do is make it really, really cheap price, or a stupid price, such that if a stock's trading at $20 today and you put in a limit order at 10, it may sound unreasonable, but you never know what could happen if a gap trade occurs, if we get capitulation in the market. This hasn't happened for 6 years, so here's where opportunity is striking, and we have to be able to strike while the iron is hot. For example, back in 2001, nobody wanted to own Carnival Cruise Lines because of the terrorist attacks, for fear that somebody was going to sink a ship. The stock closed on the Dow Jones at $24, and when the market reopened again, we had a limit order in at $17 a share, much, much lower than what it had closed at previously. When the markets reopened, by 10:30 that morning, and for only 10 minutes, did the stock hit $17 for us to be filled. It finished the day at 18, finished the week at 19, and 3 months later was trading at $35. So here's a terrific opportunity to take advantage of all of this uncertainty and all of this panic that's in the market, to start buying stocks at very cheap prices. The other way that you can enter the market by owning stocks at cheap prices is by selling puts. And this just means that you want to sell a put for the opportunity to pick up a stock at a cheap price and a higher yield. If the stock price doesn't move or goes higher, then you get to capture the premium. If the stock does fall, say from 30 to 25 at your strike price, you now own the stock at $25 a share and a much higher dividend yield. This has always been, in current environments, the best way to own the bank stocks, because volatilities are high, so you're going to reap good premiums, and with the opportunity to pick up 4, 5, 6% yields at cost. So remember, don't see this as a reason to panic, as the headline says, but as a reason to take advantage of an opportunity that hasn't come along for almost 6 years. Be smart, be disciplined, and don't be emotional.